I taught a student how to make 100K day trading with one simple scalping strategy that we trade every morning. In this video, I'm going to show you 3 simple steps, live examples, and how to use this to potentially make your first 100K. Now, when it comes to scalping, many people get the first step completely wrong. The first step is not finding a scalp setup. The first step is actually selection. Let's take a look at some of the stocks that we traded today. Look at QS here. Look at this run. So price pulls up, pulls back. We have several scalps on the way up here, consolidation, and then pulls out. We don't know if this is going to happen, but if you are in this stock versus a choppy ticker, scalping it is going to be a lot easier. Okay. So we traded QS today. We traded run as well. The ticker ran up here, broke out at the opening range, pulled back, gave us a scalp pullback setup here. And we traded this all on the live session. Now, before we go deeper, this is a part of a larger framework. My mission is to bring professional knowledge to the retail trader. So I've developed a 9-step framework that you can see on the screen. I have a full course that takes you from 0 to 100K. And if you want to download that, hit the link in the description. It gives you the roadmap. So step number 2 is to build a playbook that has edge. And a part of having edge is selecting the right tickers. Another ticker that we traded today was DPRO. If you look at this one as well, these tickers all have range here. Okay, scalping something that is choppy like this, that is range bound, is a lot harder than scalping something that is directional like this. So step number 1 is stock selection. How do I select stocks? There's 5 core things that I'm looking for. And this is all before we look at the start. Now we're gonna get to the setups, but I wanna talk to you about some of the things that will increase the likelihood that you'll find a stock that is going to run like those that we've been taking a look at here. So the first thing is a lot of the stocks that run will have a news catalyst, fresh news catalyst. So typically you'll see this, the stocks may be in a range or so, and then you see a breakout here, and you may have price discovery for a few days. And what sparks the breakout here is news. So you don't have to become a fundamental analyst. You just need a little bit of skill to be able to decipher whether or not the news that you're seeing is a strong news, maybe A++, A+, or A. And then you have the to the far bullish side, and you have to the far bearish side of news. Okay. So some news will cause stocks to run for a few weeks, few months, maybe even years. And some of the news will cause stocks to plummet intraday. So that's a skill itself. Okay. Number 2. Now, I want you to just take a step back and think about how many people have told you that scalping doesn't work. But oftentimes they are referring to scalping choppy markets, not the tickers that I'm showing here on screen. So scalping works, but we just want to be in the right tickers. All right. Number 2, your RVOL. So typically, if you're in a stock that has an RVOL greater of 5, or if you're in a lower float stock that has 2x or more float rotation, typically this is going to be a stock that may run. And then number 3, higher time frame analysis and levels. Levels play a big part in how well a stock will do in the higher time frame as well. One example of this is BKKT. We traded this in our group yesterday together, and this one was approaching a higher time frame range. It broke out of that range with volume, and we had opportunities to scalp here, and then opportunities to scalp on that breakout, and then price pulled back and gave another opportunity for a scalp to the upside there. So this play was a part of a higher time frame continuation, and then we had this level here at 2648 was a strong level going all the way back to last year. So sometimes your levels will play a part in your stock selection. If you want to see a full video on stock selection, click the link in the right-hand corner. So now let's get to the setups. Okay, there's 2 scalp setups that we take day in and day out. These are our bread and butter setups. Okay, so setup number 1 is a momentum setup, a gap and go. So price moves up to the upside. We have some consolidation in the form of flat consolidation, or it may be in the form of a ascending triangle, or it could be in the form of a flag pattern, right? And then the price breaks out here. And this is where we enter. We can get in, and this is a bread and butter setup that we take day in and day out. Okay, so typically you want to match this with volume. So you're gonna look at, this is gonna be on the 1 minute, okay? Price is going to move to the upside, move sideways, right? And when we have that break to the upside, we want to see the volume increasing. And then when price is in that range, we also want to see volume remain stable, but we want to see that the bears are weaker. And then as price gets ready to break out, we want to see a spike in volume. And as it's breaking out, we want to see that volume just come in there and the buyers get aggressive. That's setup number one. A good example of that setup happened on QS today. Okay. All right. So price ripped up here to the upside, and we're going to start to see that price is going to start to squeeze, and it consolidates into the 9 EMA here. And as price gapped up, what do we see here? We see the volume is increasing as price is moving up higher. And inside of this ascending triangle, the volume is remains elevated. So we have these spikes of volume here. Then price breaks out actually, and this is where we can get our first entry. Sometimes we have a pullback. So price pulls back actually, again, breaks out on volume, and then it holds here. So if you didn't get an entry the first time, that's your entry there, and then it moves to the upside. So that's our first setup, bread and butter. This one works. We take this one day in and day out. Now, let's jump to the second setup. The second setup, this one is price pushes up, same, volume rises here, and then price gives us a pullback on the 1 minute, and price bottoms out and continues higher, okay? And this is where we want to take our entry. When price is pulling back, we want to see that volume decreasing here to the downside during the pullback. And then we'll catch an entry here, and this is where we can take profit 50% and let the rest run. So a quick example of that one today was from Run. So Run, even though it shorted off here later on, we don't need to catch the entire move, right? We're on the 1 minute, and all we need is that price pushes out here, increase in volume. As price pulls back, the volume decreases, okay? And then we catch our setup here, entry there. As price pulls up, we take 50% and then let a runner run there, okay? So two beautiful setups that happen fairly quickly. Step 2 is understanding the setups. Now, step 3, let's talk about your entries and exits. So let's talk about the risk management here. Pro traders know something that a lot of the beginners don't. If we look at this setup, during setup number 1, during this consolidation here, and before we have the actual break, pros know how to scale in to the setup. Even though we want our primary entry and signal is the break, we're going to look for signs within the consolidation that this is going to work out. Volume spikes. We're going to read the tape. We're going to read the level 2. And oftentimes we can get a first position, P1, in before the break, and then we add a P2, a second position, after the break happens. And then we can continue to scale in. But typically, if you're able to just master your P1 and a P2 entry, what this does for you is it's going to help you keep your losses at like a -1 R, but your winners, even if you only get P, like if you enter P1 and it goes directly against you, you lose -1 R. Okay, let's pretend that. But if you get P1 in and then P2 works at, let's say once we hit 1 R total, we are actually at 2 R of our normal risk. Okay. And then if this thing's actually continues up to 2 R, now we're up 4 R. Okay. So when the trades don't work out for you right away, you lose -1 R. When your trades work and they hit at least 2 R, because you get 2 positions in, then you actually gain 4 R. And this is how you sort of engineer a 1 to 4 risk to reward. Okay. And in the case of QS actually ran like 12 R from the entry. Most people won't hold, and I actually, just full disclosure, I didn't hold the entire thing without taking out. But let's say you entered here, you got your stop in, and if you were to hold, you actually would be looking at a more than 13 R trade. But most, including myself, would take out some of that here at like 1 to 6, and then leave a runner going. Right here, this is where you enter, and then as momentum dies out, you take 50%, and then you look for a price to continue. You take another 25% as price goes higher. And then when you have a break of structure or break of the 9 EMA, then you can take the rest of that 25% out. So going back to the screen here, right? So you see how the price breaks the 9 EMA here. This is where you can take out, the rest of that 25% as it breaks. And then you can look for more entries after that. All right, now let's talk about the second one. So the second one, price pushes up, pulls back, and on the first candle or two, when you have that pause and turn, you get that first position in. And then if price pushes up, you get your P2 in. And sometimes you may not get that P2 in right away, but if price comes back a little bit and holds and gives you an opportunity, then you get that P2 in, and then price breaks up to the upside, and we have 50% here if it stalls, if price stalls. If price doesn't stall, you don't need to take 50%, okay? But if it stalls, you can take 50% there and then leave a runner. And you're gonna look for the same thing, 9 EMA break of structure, see price may turn, create a low, and then break structure. And this is where you can start to take out your positions there. I want you to watch the video on the 9 steps to your first 100K. And step number 2 is building a strategy, a playbook that has edge. And this is a part of that. So if you want to learn this step by step and actually apply it, go deeper by watching the 0 to 100K roadmap. Click the link in the description to get that free course in PDF. If you like this breakdown, watch the video on stock selection right here in the right-hand corner, so you can start to apply this as early as tomorrow. If you want to see me game plan live, like and subscribe, turn the notification bell on. I go live every morning at 9 a.m. Eastern.